Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Saturday, January 17th. Happy weekend, and we're going to take a look at the markets the way we usually do, and indices, indicators, and I'm going to focus on gold and silver today. Okay, the Dow was up 191 points yesterday, and we'll see whether it didn't close above the 10, so the jury's still out. Is this something that's starting another move to the high side or not? The wave count I've got in here, I've still got this as if it is 5 waves here, and therefore completing a 5th intermediate wave here at the high on December 26th. And therefore we're working, a 5-wave count, minute waves here of a first minor wave down. And so far it's playing out. This went to a lower low, so we'll see. And we had 5 down days in a row, so it's not surprising to get a bounce that we got on Friday. Okay, my alternate count is that this is still working a 5th intermediate wave to the high side, and that this is wave 1, okay? And so if it's, if that's the case, then we're talking about a wave 1, and that then this is 2, and then we're working some kind of 1, 2, 3, and going, we're working a 1 and a 2 kind of count up to the high side, okay? And that we'd be in a minor wave 3 to the upside, and we'll see whether or not that plays out or not. That's the alternate count that I've got in the back of my mind. All right, let me look at the indices. Oh, I know where I've got the, let's take a look at the S&P 500 real quick. Similar type thing, although the S&P didn't close above the 10. The only one that closed above the 10 this week was the New York Composite, which kind of surprised me. Right here, closing above the 10. Nice big bullish day. But again, it had also been one of the weaker ones. Looking at the McClellan oscillator on the New York Composite, it did not get oversold like it did here in December. So I'm kind of wondering about this. Let me look at whether it's not really telling me a whole lot yet. When I look at the RSI, you see these little trend line breaks that set up the moves then to the high side. And, we got kind of a minor one here, and we got a minor one that just happened now on Friday. I'm still a little wary of this. If it comes up and breaks this bigger trend line, then I think we got something really moving to the high side, okay? And of course, if it does that, it'll have a couple closes above the 10. If we get a couple consecutive days in a row closing above the 10, like we did back in here, like we did here, although this didn't have a whole lot of follow through, like we did here, then we got to sit back and go, okay, something may be going on. The alternate count may be in play. Russell 2000, again, did not close above the 10. Nice big bullish day. Came off of the support down in here, but we'll see whether any of these get follow through. On a weekly basis, let's take a look at this. We got to close below the 10-week moving average, and it closed down for the 3rd week in a row on the Dow, down 225 points for the week. S&P 500, similar type scenario, down 25 points for the week. NASDAQ, again, they're all looking almost identical on the weekly. Let me go to the New York Composite weekly. Here it is. Again, this was acting weaker, in the past, and it closed down again also, just like the other 3 did, although it's, you can see it rallied back, but it did that the week before. And here's the Russell 2000 on a weekly basis. The interesting thing, this did close below the 10. The interesting thing on the Russell 2000, you look at this, we had this 2-week little move right here, okay? Now, I say little move, but this first week was a pretty big move. But basically, it closed at the end of October at 1173.51, and we are right now at 1176. We are 3 points higher than we were at the end of October. So chopping around, just basically going sideways. Okay, now I want to take a look at the indicators. Let's look at the short-term trading index. It's right on it. Okay, we had a real low reading on Friday, which again is not surprising because of the fact that the Dow was up, so the market was up strong. The 10-day is right in the middle again, slightly below 1.2. The VIX pulled back. VIX pulled back down, and again, a little bit of a reversal day, more so than on Wednesday, because Wednesday closed up, and this one closed down. So we'll see if we get follow through in here. It tried to break this trend line, and I really thought it might and was going to go, but then it just reversed right on back down. Okay, here's the high-low index, 172 more 52-week new highs for the year, for the day than 52-week lows. Okay, so we're really chopping sideways in here, even though this trend line, the blue line's broken below the 21-day in here. Similar to here, we're chopping sideways like we did here for a few days. So we'll see where it goes. No real strong indication there at all. We talked about, I didn't talk about the, well, I did talk about the McClellan oscillator, so I guess we're good to go on that. Okay, so here's the TLT, the iShares 20+ year Treasury bond ETF. We looked at this last week, and again, it's been up over the last week. So the long-term interest rates continue to push lower, and TLT continues to push higher. And as a result, the U.S. dollar index, the U.S. dollar, well, it's not as a result, because actually, the dollar index is pushing higher, even though interest rates are not going up. So it's kind of an interesting scenario here. If you look in the past, you look over the last 30 years, 30, 40 years, a lot of times with the U.S. dollar has been extremely high. Interest rates have been high, and therefore the currency is high, and it attracts people who want to put their money in there for the return. Well, right now there's no return, and the return just keeps getting lower and lower, but it's viewed as somewhat of a safe haven. That's the only thing I can possibly figure out is what's going on with the U.S. dollar. And, who knows? We'll see. Let's take a look at the crude oil. Okay, this is the United States 12-month oil ETF, and I showed this last time also a week ago, because again, it reflects the more accurate percentage moves in the price of oil and the way it works. So over the last week, we were down slightly. We went down, rallied back, but here's the close on the 9th, a week ago at 24.54, and we closed almost unchanged, 24.47, but slightly down. So the trend is still to the downside. We're not even getting closes above the 10-day moving average. So we'll see how long oil can continue this action. Okay, now I'm going to take a look at gold and silver. All right, I'm going to start off here with the Gld Weekly Chart, and that's how we're going to look at gold. And you can see the downtrend that it's been in since this peak back up here in September 2011. And this downtrend line I've got drawn here, this last week broke that downtrend pretty substantially, pretty strong move. Let me zoom back out and look at all of this. I haven't tried to assess a wave count on this to the upside. Clearly, came from this low here and all the way up here. What I don't know for sure is this, this can't overlap here. So anyway, I did look at, if you're measuring the entire move here, this is corrected about 50%, a little over 50% of this entire move. If we're correcting, for example, this was like 1, 2, 3, 4, 5, and then a wave 2. So like a strong wave, intermediate wave 1, a wave 2, this is 3, and maybe this is a 4. Then, okay, so then you sit back and say, well, how much did it correct of this last segment? Well, it's corrected 61.8%, very deep. Deep, very complex. Well, this one was, more sharp zigzag. So you would expect more of a complex type of sideways to down type of action. So that fits that scenario. So I think that either way you're looking at it, and I'll have to look at the wave count of this whole thing much more closely. Either way you're looking at it, I think we've had a pretty good correction, and I think the complex count makes sense. The fact that we're breaking this trend line is a positive. So let's go ahead and take a look at the daily chart on GLD. Okay, so here's the daily chart on a close-up last few months. So right now, we'll zoom out a little bit. Right now we've got a head and shoulders. Let me get rid of this, I'll come back to it. We've got a head and shoulders pattern that's showing up pretty clearly in my mind, okay? And so you can see this. This is right here, okay? And now it's breaking out. And the estimated move is head and shoulders target right up here at 129, okay? It just so happens to be right about this high. And, okay, let's get rid of that, go back to my mouse. And when I look at this, clearly I think the wave count, I think we had 5 waves coming out, completing the last little leg down. Therefore, I think we're working a wave count up here to the high side, and starting, what I think might be 5 waves up as a first leg up. And this would give me wave 1, 2, working a 3. This looks like, wave 3 type of action with gaps, strong moves, that type of thing. So if that's the case, and let me get my crosshairs, helps me guide this a little bit better. If we measure and project and say, okay, well, where could minor wave 3 end? Well, we've already gotten where it's past 100%, where it's equal to wave 1. And what a normal wave 3 would be is 161.8. Now, that's considered a normal, okay? And if it goes above that, then that means wave 3 is extending, all right? So right now, I'm sitting back saying, well, here's my, normal target for a wave 3 to end. Here's my head and shoulders target based on this pattern. So I'm thinking there's a high probability that prices are going to go up into this range. Now, the real question is, how long is it going to take to get there? And that's the $60 million question. Okay, now I'll take a look at silver. See if I can pull that up. And the SLV weekly. Let's start off the weekly again. And again, a big downtrend. And I do think the corrective action is, the wave count is very similar to gold, more complex. Now, the interesting thing about SLV is of this move, let me get this out of the way, of this move here, it is corrected about 84% of this entire move. So big, deep correction. And I really think that when you start looking at the wave count and you see how deep this is, there's a real good chance that this is, going to break out and break this this trend line. Also, I just saw that it has corrected down to this 4th wave. And, typically that's what you're looking at. Wave 5 was a big extended wave 5 here in this move. And so a lot of times you are looking for the corrective action to come down in the previous 4th wave, and it's done that, okay? So let's take a look at the daily chart. Okay, so here's the daily chart, and it looks a little more like a double bottom type thing that's being put in. I don't see a head and shoulders pattern. And if I look at the double bottom, typically when you break this middle point here, if it was a top, you'd call it a valley. I guess I'd call this little peak in between the two bottoms here and here. And breaking above and closing above that, it projects up to here at a minimum. So that's where I'd be looking for it on silver or SLV. And let's see, we already talked about the long-term trend line, and I think that's going to put it right at it or break the trend line. Okay, now I want to take a look at 3 stocks. I want to look at Goldcorp, Newmont Mining, and then Silver Wheaton. Okay, here's Goldcorp on a daily basis. Now, again, Goldcorp is putting in more of the way SLV is putting in the bottom. It's you know, it's got this double bottom that's showing up, and it's not mirroring GLD's head and shoulders bottom, which I think is kind of interesting. It's clearly broken, closed above this high point here in the middle. Therefore, it looks to me like this is confirmed the double bottom, and you know, the minimum measure move is up here where I've got this dark bar, 27, and it happens to coincide with a resistance point here that this was support, and now I'm bringing it over as potential resistance, and it happens to coincide with this exact measurement distance here to the upside. And again, when I measure this, I'm measuring it on the screen, not in points, but in actual distance on the screen, because this is in semi-log, so that the percentage move down here is the same as the percentage move up here. So 1 inch down here equals the same percent as 1 inch up here. That's why I use semi-log. All right, now let's take a look at Newmont. Now Newmont is a similar type thing, but nearly, you know, the bottom is not nearly as big and strong as Goldcorp's is. And so it doesn't have that big of a move projected, and it's up here just slightly over 23.5, and we're already closed at 22.29. So not sure what the difference is on that. And then here's the trend line. And again, this is going to put it right at this trend line. We'll see whether these mining stocks start to mirror gold a little bit closer and start breaking this trend line and break out to the upside or not. And that's going to be, you know, the key point right in here, because this is that long-term trend line that I've shown, and I happen to put it in here on the daily chart too. And let's take a look at Silver Wheaton. And Silver Wheaton is actually, you know, I want to go to the weekly first. Okay, here's the weekly chart on Silver Wheaton. I'm going to back on down. So you can see from this point out here in 2011, April 2011, it has been basically overlapping, chopping sideways to down. So this has been nothing but corrective action. And my take on the corrective action is this complex combined, you know, A, B, C, W, connecting wave X, A, B, C, Y. You know, this triangular type of action right in here. Triangles are always either fourth waves in impulse moves or B waves in corrective moves. That's why we've got it labeled as a B, and it fits the scenario. So therefore, this last C wave to the downside is a 5-wave move. That's the way I've got it labeled. So I think the corrective action ended here on November 7th. So now this means that we should be starting a new up leg, wave 1, to the upside of a new impulsive move. And of course, the confirmation that the entire corrective action is over is when this trend line breaks that is containing all of this corrective action. So let's go to the daily chart. Okay, so here's the daily chart, and now I've got this trend line in, that long-term trend line that I was just talking about and showing on the weekly chart. I've put it in here on the daily chart. And so now if this is kind of our 0 point, the end of the corrective action, and we're thinking wave 1, 2, and 3 to the upside, let's take a look. You know, does this wave 2 look like it had a nice deep correction? It looks like it to me. Come up here to the top of wave 1, it corrected well over 61.8%, and so it was a nice deep move to, you know, pullback, okay, which is what you expect on a wave 2. Now wave 1 could possibly have ended here, but then that would have meant that this little wave was like a 5th wave, and it wasn't really clear to me that it was. This looks like a flat, looks like an A, B, C flat with a deep corrective action. But really, whether it ends here or ends here doesn't matter a whole lot to me. This is more conservative, actually, when I'm projecting and making a projection, which I'm going to show right now, as to where I think wave 3 might end. So if we go to the end of wave 1, come back down to the end of wave 2, here, right here, 24.1 is where wave 3 will equal wave 1. And then up here is where a normal wave 3 would end, like I just talked about, you know, on GLD, okay? And so this is where a normal wave 3 for this move would end. assuming we have a wave 3 in place, which I think we do. And that will get us the breakout of the trend line. It also coincides with this previous intermediate top here. Okay, so I like that as a target. So we'll continue to watch the wave count that's unfolding here in that third wave. And looks like we have a 1, 2, and looks like we're working a 3 within a 3. So the price action is starting to get kind of vertical, starting to move a little quicker. We'll see if it continues to do that and play out. Okay, that's it for today. This has been a nice look at gold and silver, and we've got a long weekend. We don't have any trading on Monday, so I'll be back. I'm going to do the trade ideas, issue the trade ideas on Monday instead of Sunday. Haven't looked at the stocks yet this weekend, so I'm not sure if there's anything new out there or not. We'll take a look at it and see, and we'll kind of go from there. So this has been Joe for Beyond the Chart. If you felt like the video was helpful, please share it on social media. And if you're not a subscriber, subscribe. It's very easy to do. Just click on the little red box here or on the website, any of the little box entries, first name and email. Gives you access to the Trade Ideas webpage. And you can download the free PDF I've got for you, and you then get notifications of when new posts are put out. So, all right, everyone, have a great weekend.